Live. Welcome to our very first A Day in the Life series, the new Gradlinc series that we are kicking off in 2024. If you are still joining, we'll give you a moment, but we are also streaming live on our YouTube channel for Gradlinc. Today, we have Jaco Eger from Rand Swiss in the house. Welcome, Jaco.
How's it, everyone?
And then I also want to introduce my colleague, Yonu. He is going to monitor the questions in the chat in the back end. And myself, Lizanne, welcome you to the session. I'm going to kick off. We only have half an hour. Jaco, I want to start with my very first question. As a wealth manager, the topic for today, I want to know what was your journey like, or what kind of career path that you followed to get to the point where you are at today?
Okay, I think the journey is quite wide in terms of how you get to where I am at. So there's not one single path. I think there are quite a number of paths you can follow. My specific one, as I studied my undergrad, was in investment management, financial mathematics, for my sins. So I had to do a lot of technical work. And then obviously, you do some postgraduate, either diplomas or, designations. There's a couple of things you can add to the CV kind of later on. But that's just to kind of, make your arsenal broader in terms of the advice and the tools you can use with clients. But personally, investment management, I have two designations, which you do postgraduately, a certified financial planner. I use Milpark. I'm sure you've heard of Milpark. So I did my diploma. It's a 2-year diploma in Milpark. And then you write the board exam to become a certified financial planner. It's for the Financial Planning Institute, the FPI. So that's on the one side. On the other side, I'm a chartered alternative investment analyst, which is a US degree. I think everybody listening would probably be more au fait with CFA, the Chartered Financial Analyst. So it's basically the same guys. They just have one or two other streams that's probably a little bit less known. So the Chartered Alternative Investment Analyst, I thought was very interesting to add. We need diversification, etc., in investment portfolios, and alternative assets can give a great diversifying and non-correlation factor, which I'm sure we'll delve into a little bit later. But I thought that was kind of important. You can of course do CFA as well. I would highly recommend the CFA charter as well. Also a US based, so accepted everywhere. CFP, by the way, is the Certified Financial Planner, is also a globally recognized designation. However, because a lot of what we do is very specific on wherever you are. Now, okay, South Africa, the tax laws, and all the rules and of your specific area, you will have to just redo or do a refresher on the tax laws, etc., in the jurisdiction you end up at. But the bulk of it will be exactly the same, and that will be accepted everywhere.
Oh, wow. Well, that sounds quite interesting. Tell me, after your initial qualification, how many exams did you have to write in total to get here? You've mentioned the CFA or the CFP. Like, there's quite a couple of exams involved, isn't it?
Yeah, that's true. So CAIA, the KAIA one, if I can use the kind of short abbreviation, it's two kind of big exams. So the body of knowledge is quite wide. So you need to study a lot. It's 2 years. So once every year you write one. And then the diploma that you need from, in my case, Milpark. What I liked about Milpark, or the route via Milpark, is because you have these constant little tests and assignments you have to do. So it's almost a weekly thing once you start. Every here and there there's there's a break of a week or two. So then it's kind of smaller tests at the end of every call it segment. There's about 7 or 8. And then a big exam at the end, which will cover everything. So, call it 3 proper exams after qualifying, after doing my undergrad.
Yeah, it's always good to know. People often think, when they walk out in their final year, this is my last exam. And depending where you go to, there are often extra additional certifications or diplomas that involve exams. And some can be quite hectic if you just think, the accounting route, if you write board exams to become a CA or in law. And people often forget about this. But can you take me through a typical day in your life?
Look, I think today was probably quite a typical day, so I'm going to take you through it. I'm probably going to expand a little bit here and there because, unfortunately, every day looks slightly different. But I mean, the first and foremost thing of a wealth manager is sitting in front of a client. And so you get either referrals or new clients coming in. So you have to kind of start that journey with the client. And today was one of those days for me and a client in Cape Town. I had to drive through, obviously prepare a bit for the meeting. So a client typically gives you a high level initially of what they have in terms of, let's call it investments for the moment. And then you do a little bit of research. As the years roll by, you kind of know all the underlying instruments that are available and the clients do utilize. So it gets a bit easier from a preparation point of view. But then you go to the client and you explain who you are and what your offering is and how you kind of approach investments and wealth management as a whole. And I'll hopefully we'll dig a bit deeper into what is the definition of wealth management in a minute. But then you'll kind of gather that information. You'll understand the client a little bit better. They might come to you, you might go to them. And then you go away and then your work starts. So then you're going to build a proposal. Typically, you have a team in the background, where everybody contributes to the offerings that you offer a client, and then you have hopefully an investment committee in the back end, and you formalize then the proposal that you take back to the client based on almost a house view, if I can call it that. And that may take a day or two. So today I drove out to a client, a high net worth client in this case. And the client, ironically, I just saw the email coming in as we're sitting and chatting here. So the client sent me all the specific info I needed from them, which we can unpack a little bit in a minute. And I'll now go back, dissect that, put that against our offering and build a proposal for the client. Then let's assume the client accepts the proposal, in full or in part, whatever the case may be. Then we'll implement it. And then I have, depending on the client needs and who the clients are, etc., because you get individuals, you get companies, you get trusts, etc., that become your clients, and then you'll revisit the financial plan, whichever investment plan you have for the client, on a let's say yearly basis minimum. The law requires a minimum of a year. So every year I need to at least see my clients, but it may be more. I have kind of high touch clients which I see quarterly, and they need to discuss what's happening in the financial world, where they're at, what changes are we looking at, and some clients are not very financially astute, so they may have less questions, but you have clients that enjoy Google a lot, and you get a bunch of questions thrown at you. So I would say that's probably all very typical of what a day would look like. But I mean, then they're different days. So we have a ton of systems behind it. So let's say I need to look for the best funds, or the client wants a specific portfolio. I mean, AI is the topic. We're looking at some, I suppose, some solutions AI has provided, right in front of us. So AI is a hot topic. And let's say a client says, I want to X amount of rand or dollars, I want to allocate to an AI type portfolio with, a certain mandate. I want this and that, and then we look for funds, or maybe shares or stocks locally or offshore that includes that, and then I have to go back and do the research on these systems and build the proposals, etc. So I would say the nice part of what I do is definitely client facing. You get that when you see a client and the client really interacts, and they and they kind of see the value you can bring to them as a family unit, as a business unit, or whatever type of client it is. It and you can see their value being added, and them taking part in the process. I get quite a, call it a buzz, from that, and that's one of the nicer parts of my world. But there's definitely the more, if I may call it, admin type, mundane tasks in the background. Sometimes there's a lot of research going into it in the back end, which is not the type of stuff that typically excites us. There are people the more analytical types that enjoy that part of this world a little bit more. But I mean, the team, usually you have a team behind you, whether that's administrators or tax specialists, or specialists in law, depending on what you need for a specific case. And then obviously the investment committee, the guys that meet. In our case, we meet weekly, but we only have one kind of formal big investment committee per month. But there's a lot changing. I mean, if you just listen to the news every now and again, you hear how the financial markets change, and things happen, and somebody says something, and the Fed changes their views, and then that impacts our world obviously dramatically at some points. So we can't really leave it for a month later. So therefore we chat as an investment committee, weekly, and tilt if we need to our views. But we tend to make the big decisions, changes, or to portfolios, changes to views, roughly monthly. I think any other questions that come up from that, but I think that's kind of a day of, or a couple of days of.
Yeah, I've got two short questions, and then there's a question in the chat. You just percentage wise, how much would you say is client facing of your typical day-to-day activities, and how much is admin or not interacting with clients?
Non-client facing, yeah. I think admin is probably too soft a word. I think, look, you typically have admin people and paraplanners, etc., that will pick up a lot of the the pure admin tasks. But let's call it non-client facing. So I would say probably about, depending on the season as well. Typically, so most of my clients are half, twice a year, half yearly, that I need to see them, and for some reason, and I probably should change that a bit. For some reason, I just cut the year in half. So June and kind of November are my big ones. So then I would say it's probably 80% in front of clients and 20% non-client facing. But those are only call it the high seasons from a review perspective. Remember, these reviews that I need to do either quarterly or yearly, or whatever the case may be. Sorry, let me just, hopefully this is not interrupting the feed.
That is some client looking for you.
No, it's actually one of my colleagues. Nonetheless, so all other times, I would say it's the reverse. It's probably about 20% client facing and 80% non-client facing.
Okay. And just a last quick question, and then I'm going to go back to the chat. You mentioned offshore trading, or you mentioned stocks and trading and stuff. The idea I have in my mind when you say trading is someone sitting in front of 6-7 computers and following stocks and doing, kind of hectic, risky interactions. Is that part of your job, or is that someone working with you?
Yeah, look, maybe I should define a wealth manager a little bit better. But just to answer the question in brief, way back in my younger days, by the way, I still consider myself young, but in my much younger and highly risk-taking days, I was at one point. About 12 years ago, I was head of a stockbroking desk of a listed company. So exactly, 6 screens in front of you, you have to watch everything, clients phoning in, etc. So it's a lovely environment, nice high-paced environment. I enjoy that a lot, but I've kind of moved away from it for a couple of reasons, which we can discuss later if needed. But no, a wealth manager is typically not that involved in day-to-day trading. Yes, I do implement client portfolios. We also have a team that can implement client portfolios, but that is more, call it the longer term stuff. I'm not going to advise a client on buying the rand dollar pair today and getting out tomorrow. That's not the game of a wealth manager. So maybe while I'm on that point, let's talk about what the definition is of a wealth manager. Unfortunately, it's quite a it depends on who you ask, who gives you the answer. So I'm going to kind of give my answer. Unfortunately, there's a lot of people in the profession that now call themselves wealth managers. And I always equate it to this account executive. I don't know if you've realized, but you used to get an account executive in a bank, specifically on your account. I'm talking 15 years ago, probably 20 years ago, account executive. And everybody just started assuming the name account executive more and more and more. Now you'll get an account executive at Edgar's. You literally get an account executive wherever you walk in. And unfortunately, the wealth manager role also tend to it's not well enough defined. Now, the FPI, the Financial Planning Institute, is starting to look at ways to define a financial advisor and wealth manager, and hopefully that will come in the future. But a wealth manager has quite a broad skill set, and I'm just gonna. I did a short YouTube series. It was about eight YouTube videos that I did for our clients on the topic of wealth management, and I'm not going to go through everything in detail, but just you cannot advise a client without knowing how the client is married, what the will looks like, who is getting what. There are estate duty implications with however your will reads. There are certain tax implications, donations tax, estate duty implications. So you need to understand that. So at the very start, even something that sounds as simple as a will, I need to know exactly what's going on there. If it's not an individual, trust documents, I need to see. If it's a company, I need to see those documents. So it's very much the basics to understand that if we advise anything, what's going to be the implications from tax, estate duties, etc., going forward. So that's definitely one of them. The other thing is, of course, the risk benefits. So the old financial advisor that you kind of, I think everybody is used to the term that it sells a life policy, and if it's a company, buy-sell agreements, key man insurance, those types of things, that still falls under the net of a wider wealth management role. Then you add retirement planning. A lot of clients would like to know where am I at now? Where do I need to be in 5, 10, 15, 20 years? I'm sure most of our listeners at the moment is quite young, so you probably have 30 or 40 years to retirement. But I can't stress enough that you need to start saving for retirement, even if it's small amounts of money, as soon as possible. And there's obviously a plethora of ways in which you can do it. Retirement annuities, tax-free savings account, money markets these days are accessible to anybody on a but you need to understand the tax around it. But save now, start. Okay. So tax pre and post retirement planning is a big one. Then we also need to advise clients on investments. Obviously, the retirement assets definitely, but also the broader spectrum of investments. And you get, obviously your onshore investments, which I think we all hear, and it's in the news and you read it in the financial media, but also the offshore portion, which has become more and more relevant over the years. I don't think you can have a feasible or a suitable financial plan without a good allocation to offshore investments. And the reason is very simple. The rand dollar exchange rate will weaken over time. And it's a function of the economics, the world financial markets. To keep it in balance, we're going to have to roughly weaken by the inflation rate differential, the difference between, if we talk rand dollar, which I think most people are kind of used to hearing, it's 18, I think 64 today, depending on the minute you watch it. But it's going to weaken at about 2 to 3, some years maybe 4%. And that just means our buying power internationally gets lower and lower. So if you are able to pay for a ski holiday 15 years ago X amount of money, then the dollar weakening, it's gonna really hurt 10, 12 years later. So you have to understand that your international buying power is also highly affected by how strong your currency is. And we're living in a country where we have kind of higher inflation rate, and just by that inflation rate differential, that the dynamic, we will weaken over time. So you need to understand that and have a healthy allocation to the offshore world as well. And then obviously we need to understand intergenerational kind of wealth planning. So I alluded to estate duty, but you need to understand where the money is going, how is it going to be looked after, for the next generation or whatever the case may be. And those are a couple of things that I think defines a wealth manager. So it's kind of a long-winded answer, but a wealth manager needs to be a specialist on most of those. I'm not saying all of them, because you generally have a team. If I have a really complex trust and tax matter, then we'll get the experts in that world in. But I need to have a high level working knowledge of all these things I discussed now, to appropriately and effectively advise a client.
Yeah, it makes sense. Otherwise, you're going to give them the wrong advice, and you don't know how it affects them and where they end up losing all their money. I've got 2 questions here. I think you actually kind of answered both of them, but I'm going to read it out to you, Jaco, and please add. We've got about 5 minutes left, and then the session is going to automatically end. So I just want to wrap it up there. If anyone has more questions, please put it in the chat. But the one was asking, how do you become a wealth manager? This student joined late, so we kind of answered this in the beginning. Shane, we are live streaming on YouTube, so I think we will send you the link afterwards. Then you can go and view it again just to catch the beginning. But the second question is, can all individuals, regardless of net worth, benefit from having a dedicated wealth manager? That was the first question.
Absolutely. Yeah, I think, and obviously you have wealth managers that focus on specific areas. from whatever the client is worth. So you get wealth managers that focus on young professionals, for example. You get wealth managers that only focuses on post-retirement clients. So those are usually big lump sums of money. So yes, a wealth manager you can choose, but a wealth manager can advise anywhere along the adult journey of a client, and I think add value. The silly one is the will. I mean, just to start there, you need a will in place. Doesn't matter your age. So you need to at least have that in place. You need to start retiring as a young professional. One of your biggest risks, I always ask younger clients, what do you think your biggest asset is? And I don't want to go philosophically or religiously or politically in that question. Just your biggest asset. But I usually get kind of philosophical or religious or political answers. But what I'm looking for is your ability to generate an income. Your biggest asset as a young professional or as a young person working is to earn an income for the rest of your life. And if that becomes a problem by whatever may happen, sickness, accidents, etc., you need to make sure that leg of the table is strong enough. So yes, I think definitely there's a wealth manager that should guide you along the way at every point.
You can never be young enough to start.
Absolutely.
Then the last question, if you can quickly, is maybe relative, but just for those who are joining us today, from here, now you're in a position what you described as today, your daily life. Say you want to grow in the field. What are the opportunities? Can you branch out into some other portfolios? Can you, what is the career opportunities from where you are at now?
Look, I think you almost start branching out once you're a wealth manager, like where I'm at now. I'm not looking to take another jump somewhere. I've kind of chosen the wealth manager route. It suits me. It suits how I want to live. You don't earn a salary, you earn income. The assets under management gets bigger. What then helps is this kind of recurring income that you get with your assets under management. So you need to get that to a size that's comfortable, and then I suppose just get better and better at it. But I think when you're 20 years old and you're starting this journey, is that you can go into any of these subspecialties. Chartered accountants have become, many of them have become wealth managers because you have a good base. So the accounting side, the tax side, definitely. You can be analysts on either funds or stocks that advise fund managers. I mean, with the correct base, you can become a fund manager yourself. So yeah, I think once you have the basics in place from an undergraduate point of view, there's quite a few fields that you can choose to specialize in, and I think a wealth manager is one of them.
Well, Jaco, thank you very much. We are on 56 seconds before we run out. I am taking note of your question, Shane. Jaco, I think maybe we can take this discussion offline and post it on LinkedIn. What is the biggest and most common pains that your clients tend to face? I really think it's a great question. And perhaps we make more of it in a type of blog post to continue the series. But thank you very much for joining. To all the participants, thank you. We will be here every Monday going live, interviewing people in the industry to bring you the live and actually real world data about what life is really like in their world. Thank you very much for joining. Jaco, again, thanks so much.
Thanks for having me. All the best.
Thank you.